Hello, ladies and gentlemen. Welcome back to Reserved Investments. And I got to tell you, it's been an exciting week. I pretty much didn't upload any videos for a solid week. And there were a lot of happenings in the overall antiques and collectibles trade. So it's good to be back. We're going to be talking about all of these recent developments. And where I want to start first, I don't think the YouTube algorithm is going to like this video as much as the others that I have planned. But I do want to talk about hedge funds taking an active interest once again in the antiques and collectibles trade. Now, in case you're unaware, I've covered this extensively in earlier videos on this channel. Back in the late 1980s and early 1990s, there was a lot of growing interest on Wall Street to convince Main Street that they should invest in antiques and collectibles. And one such company that came to the forefront of this was Merrill Lynch. Merrill Lynch created two funds catering to both the graded rare coin marketplace and also the art and high-end antiquities marketplace. These funds were aptly named the Athena Fund and the Athena Fund II. And what happened was there was, unfortunately, a lot of hanky-panky going on behind the scenes where a lot of, how do I want to say this, shady dealers got involved. A lot of people that were pretty much advising these funds as to what graded coins, what pieces of art, what antiquities to invest in. We're not really doing it for the betterment of the investors involved in the fund. They were basically doing it to line their own pockets with this particular investment fund's money that would be used then to acquire these pieces. Well, lo and behold, as you can imagine, especially if you study anything on the graded coin bubble that occurred back in the mid to late 1980s, the bubble eventually burst and investors were left holding the bag. So there were massive lawsuits filed against Merrill Lynch for how they handled these two funds, the Athena Fund and the Athena Fund II. And while Merrill Lynch admitted no wrongdoing, meaning they went public and they said, hey, we really did nothing wrong here, they still agreed to shell out between $20 to $30 million to pay off the early investors in these funds. Now, interestingly enough, this, of course, wasn't enough to keep Main Street from wanting to invest in the antiques and collectibles trade, and also Wall Street out of the trade either. What happened was, during this particular fallout period, it just morphed into other ways that Wall Street was pretty much pulling the strings in the overall antiques and collectibles trade. Now, when I first started this YouTube channel back towards the end of 2019, 2020, the beginning of that year, we had a lot of companies that were gaining headlines coming out of the gate, offering you the ability to invest in certain high-end collectibles like an Incredible Hulk 181 in CGC 9.8 condition or an Andy Warhol painting. What they would do is they would buy the piece outright and then they would sell fractional shares of that particular collectible. So for instance, for a little like a couple $100, maybe $1,000 at most, you could own a fractional share of the collectible in question. And of course, there were companies like Masterworks.io, which I think is still operating to this very day. There were other companies like Collectible, also Rally, that offered these services. And they've had some success in this area and also limited success in others. Now, obviously, I always tell investors, collectors, to use caution. If you are going to invest in collectibles, utilizing any type of fractional share company like Masterworks or Collectible or any of these other upstarts, simply because you're taking an illiquid item, a collectible, and you're making it even more illiquid, then you're also paying management fees to the company in question to pretty much just be able to own a fractional share of that item. In my opinion, it makes no sense. Now, also what we had coming up, going on behind the scenes in the antiques and collectibles trade, is something called private equity. Just in case you're not aware, a company like Blackstone pretty much owns a large portion of certain grading companies out there that I'm not going to name. So there's a lot of private equity money that is also flowing through to the antiques and collectibles trade. It goes back to what I was saying earlier on in this channel when I told you when billionaires and the ultra rich invest in the antiques and collectibles trade, they tend to go after the grading companies and the auction companies. They don't so much as go after the individuals, items themselves, unless, of course, they're buying like $100 million plus painting, or they too identify as being a collector at heart and they want to own some of these items. But for the most part, when billionaires are investing in the trade, they're doing so at a mass level where they're going after the individual companies themselves, usually through private equity. Now, interestingly enough, there for the longest time, we really didn't have that much direct activity with Wall Street truly being active in the antiques and collectibles trade. There was a couple of news stories. There's still interest by a few hedge funds. Well, now, lo and behold, believe it or not, we have something called Luxus Funds LLC. And for all of you curious about this, I am going to post links to articles and also this fund in the video description below. Now, Luxus Funds LLC probably isn't going to be something that interests most of my viewers out there because they invest in, get this, luxury handbags. But it is very interesting how this is playing out because, believe it or not, they offer two funds devoted to Hermes Birkin bags, and both funds are now oversubscribed and closed to new investors. If you go on their website, there actually is a waiting list to invest in Hermes Birkin bags. Now, because I know that a lot of the people that watch this channel, they may not know what an Hermes Birkin bag is. I did do an earlier video on this where I talk about the origins, the introduction of the Hermes Birkin bag and how it became a fashion icon of celebrities from everyone from Hilary Duff, my favorite Hollywood crush, by the way, to Paris Hilton, to Britney Spears, to anybody else who is a known it girl. Hermes Birkin bags are where it's at. Well, if you don't know what an Hermes Birkin bag is, just look at the screen right now. There are some examples. Most investment grade Birkin bags pretty much sell for tens of thousands of dollars on the secondary market because the company that manufactures them, Hermes, does an excellent job at mass-produced scarcity, meaning they pretty much limit the amount of merchandise that is able to enter the primary marketplace at any given time. If you want to purchase an Hermes Birkin bag from the primary marketplace, meaning you walk into a Hermes store, like I live near the King of Prussia Mall, there's an Hermes store in that particular mall. Any high-end shopping mall has one. You actually have to be invited to purchase these bags on the primary market. So there is a massive collector's market opening up and has been opening up for several years now on the secondary market, where auction companies like Sotheby's, Christie's, Heritage Auctions pretty much have auctions catering to collectible Hermes bags. And some of these bags hit the six-figure mark on a regular basis. Well, now there is a hedge fund, and again, this is according to Forbes. I'm going to link this article below that talks about the development of Luxus Funds LLC. And I'm going to read you a couple of paragraphs here because even though I'm going to post a link to this article in the video description below, it is behind a paywall. Now, if you normally don't frequent www.forbes.com, you can probably get a couple of articles for free. So the vast majority of you will probably be able to read it. But I do expect to get some emails from individuals saying, Sean, I couldn't open the link, or I had to subscribe, or they're asking me for money. There are sites out there, without going into detail here, there are sites out there that let you to read paywall articles on the internet for free if you know how to use them. That's all I'm going to say. I am going to just read, though, 3 paragraphs from this particular article, courtesy of Forbes, because I do think this is a good piece, even though I will say it is kind of promoting this hedge fund, this idea of the fact that we can now invest in the antiques and collectibles trade by using funds created by Wall Street, which really didn't work so well in the past. But here we are, we're in this new brave era. We're in this new internet era where cryptocurrency is a thing, where we have all these other alternate asset investments that are going gangbusters. So why not come back and visit the old stable alternate asset class known as antiques and collectibles, merge it with a hedge fund, and see what happens. Well, here you go, guys. You're going to see the results thus far have been stellar. But what I don't think people realize, when we look at anything that is based in luxury fashion, consumer and collectors' tastes can be fickle. Now, obviously, if we start talking about Rolex watches have been a status symbol and also a collectible to a certain extent for many, many years now. I don't anticipate that changing. Maybe it's quite possible with the way that Hermes is marketing Birkin bags, this too could have legs over the next several years, over the next decade. I'm just cautious on this because of the fact that we have Wall Street involved in this market, and we have items here that are considered luxury items that are being treated as high-end investments simply because the manufacturer chooses to market them as such. So that's why there's a lot of caution in this market from my perspective. So let me read you a couple of paragraphs here. Stocks, bonds, and commodities are the name of the game for most hedge funds. But Luxus has a unique investment, Hermes bags. The venture-backed wealth tech company focused on luxury investments, which was founded by ex-Blackstone executive Dana Aslander, just unveiled 2 Hermes-only funds dedicated to Birkin and Kelly bags, treating them as investment-grade assets. And I have to state before I go any further, you guys know I'm horrible with people's names. I don't even know. I think her name, Dana Aslander, I don't know how it's pronounced. But I'm just putting that out there. It is in the article. So I do apologize if the person, Dana, does listen to this video and I pronounced her name wrong. I did not intentionally mean to pronounce your name wrong. Going back to the article, my passion was always to create financial products and alternative investments. So it was mostly hedge funds, private equity, private credit. But I've always loved the fashion girlies and try to inject a little bit of fun into boring private equity and hedge fund worlds. My thesis is very simple. The investor and the collector are the same person, so you have to cater to them in the same way, and they want to be able to also invest in the assets that they collect, whether it's art, whether it's jewels, whether it's Hermes. Trust me, a lot of people collect Hermes, and she's absolutely right. Believe it or not, I've had a lot of experience where people are coming to me and they are choosing to invest in Hermes Birkin bags. This is a legitimate collectible. I'm still cautious about it. It's highly speculative, but it is something where people are parking their money. Back to the article. Backed by Christie's as the world's first Hermes dedicated investment fund strategy. The initial fund raised $1 million in May and realized a 34% net return on investment with a 43-day average resale timeline. Sparked by overwhelming demand, they created a second fund that raised $2 million. Until now, the fund has been in stealth mode, gaining investors via word of mouth. The idea is that Hermes bags perform similarly to gold. And this is where we're at in the antiques and collectibles trade in the year 2025. You know, I do have to state something before I end this video. I get a lot of feedback on this channel from people that accuse me of being one of those evil investment dudes that are making their hobbies, their beloved interests, more expensive. And I admit, I am an investor in these markets. I am one of those evil investors that some of you guys out there love to hate. But believe it or not, I do emphasize caution in a lot of these markets from an investment standpoint. Because you have to understand, if this hedge fund here would end up going south, the hedge fund would still be making money at the investor's expense. And that's what you guys got to realize. Investing in anything like this is inherently risky. It doesn't matter if you're doing it directly or you are using like a third-party service, whether it's a true hedge fund or whether it's one of the fractional share companies. You guys have to be very careful if you are investing in the antiques and collectibles trade, especially over the long term. Always remember my golden rule. These markets work best as a diversification of capital to somebody who is already well-financed, well-diversified in financial markets, real estate, precious metals, and the like. Alternate asset investing should never be the main course of your investment portfolio. Thank you for watching. Let me know your thoughts in the comment section below. I will link the article and also the hedge fund, the link to the hedge fund in the video description below. Please also keep in mind, this is by no means any form of an endorsement for this fund. I want to make that very clear. This is a collectibles finance channel. It's my job to report on all of these developments and make you understand that there's a lot of risk to navigate in these markets. Always remember, wise investors, they don't look at how much they can make. They look at how much they could potentially lose. Learn from that, and you, my friend, are well on your way to becoming a very well-versed and smart investor. Thanks for watching, and have a great day.